Welcome back to Investing Talk Podcast.
Today we're looking at IREN.
As usual, before we start, subscribe, like, and comment to this video to support the show. All right, so today we are looking at a company that, it really feels like it's suffering from a pretty severe split personality.
That's a good way to put it.
You know, on one side, you have this legacy Bitcoin miner just sort of churning away at cryptographic puzzles.
Yeah.
And on the other side, you have this emerging, high-tech AI infrastructure beast that wants to power the next generation of intelligence. And judging by the market reaction this week, investors are having a really, really hard time figuring out which one they're actually buying.
Split personality is a colorful way to put it, but you aren't wrong. What we're witnessing with IREN is it's a rare real-time metamorphosis in the public markets.
Metamorphosis.
Yeah, they're attempting to pull off what I consider the hardest trick in the corporate playbook. Pivoting from a cyclical, commodity-dependent business crypto mining to a high-margin, sticky AI cloud provider.
So it's not just a pivot, it's a total reinvention.
It's a total reinvention of their DNA.
And if we look at the charts, that reinvention is getting messy. We are recording this on Monday, February 9th, 2026. Just 4 days ago, on February 5th, the stock didn't just stumble, it absolutely face-planted.
Well, we did.
It dropped 11% in a single session. And the selling didn't even stop at the closing bell. It kept bleeding into the after hours. If this strategy is so brilliant, why did the market treat the stock like it was radioactive?
It was a brutal sell-off. There was absolutely no sugarcoating that.
Yeah.
But this is exactly where we have to separate the stock price from the business value.
Okay.
The market panicked over a headline miss, which we will definitely unpack. But in doing so, they completely ignored the tectonic shift happening below the surface.
So what's the signal in all that noise?
Here's the signal. IREN has locked in $2.3 billion in annualized recurring revenue, or ARR, for their AI business.
$2.3 billion. That is not small change. That is a serious number.
It is a fortress of a number. And here is the kicker that I think the bears are missing. Roughly $1.9 billion of that is coming from a single customer.
Ew.
Microsoft.
Yeah.
So you have a company with a multi-billion-dollar endorsement from the second largest company on Earth, yet IREN is trading at just a fraction of the valuation of its AI peers.
So the market's pricing them like they're still just a Bitcoin miner.
Exactly. They're pricing them like a dying Bitcoin miner, but the balance sheet says they're a burgeoning cloud giant.
Okay, hold on. I want to drill down on that because narrative is cheap, right? Anyone can put a big number in a slide deck and call it projected capacity. Let's look at the actual plumbing of this business. Let's move into the fundamentals. Are they making real money from AI today, right now, or is this all just forward guidance and hopes and dreams?
It is happening right now. If you look at the financials, specifically the revenue growth, the story's pretty clear. Total trailing 12-month revenue hit $688.6 million. And just to give you a sense of the velocity here, that's up from roughly $205.6 million at the start of the period. That is explosive triple-digit top-line growth.
That's a big jump, sure. But we both know that broad revenue numbers can hide a lot of sins, especially if it's just low-margin mining income masking the rest. How much of that pie is actually the new high-quality AI revenue?
This is the metric that matters most.
Yeah.
In the second quarter of 2026, their AI cloud segment revenue grew 136% quarter over quarter.
To what?
To $17 million.
Okay, I have to play the skeptic here. 136% sounds great. It sounds explosive. But $17 million against nearly $700 million in total revenue. That's a rounding error. It's barely 2% of the business. You're asking investors to bet the farm on a sliver of the pie while the rest of the bakery is on fire.
That is a fair pushback, and it's exactly what the bears are saying. But you're looking at a snapshot, not the movie. You have to look at the rate of change. That $17 million represents the first green shoots of that massive $2.3 billion backlog I mentioned. It proves two critical things. First, that the hardware works, and second, that the customers, specifically the really demanding ones like Microsoft, are signing the checks. It's proof of concept at scale.
All right, let's look at another number that I think terrified people last week, the bottom line. In Q2 2026, IREN posted a net loss of $155.4 million.
Yeah.
You're sitting here calling this a strong buy, but they just burned $150 million in 3 months. How do you reconcile that? How do you tell a listener this company is healthy.
I love when the headlines look this scary because it scares away the tourists and it leaves the opportunity for the researchers.
Eh, yeah.
Yes, the print said a loss of 155.4 million. But if you open the filings and you actually read the footnotes, the story changes completely. That loss wasn't cash flying out the door to pay bills.
So what was it?
It was driven almost entirely by non-cash charges, specifically $219.4 million in asset revaluations.
Translate that for us. Is that just accounting magic to hide a bad quarter?
No, it's standard accounting for this sector, but it does distort reality. Because they hold Bitcoin and specialized hardware, they have to adjust the value of those assets on paper every quarter. If Bitcoin drops, they take a loss on paper, even if they didn't sell a single coin. It's like saying you lost money because the Zillow estimate of your house went down this month.
You still have the house.
You still have the house. You didn't lose cash from your wallet. If you strip out those paper adjustments and look at the trailing 12-month net income, it's actually positive at $523.3 million.
So operationally, the lights are on, the registers are ringing, and they aren't, burning furniture to stay warm.
Exactly. They are highly profitable on a cash basis. They aren't bleeding, they are printing.
Okay, let's talk about the cash that is actually in the bank then. Because building data centers isn't like building a website. It is heavy industry. We're talking concrete, steel, cooling systems, and extremely expensive silicon. If they're pivoting to AI, they need to buy thousands of GPUs. Those cost, what, $30,000, $40,000 a pop? Do they have the war chest to fund this, or are they going to run out of runway?
They have what we call a fortress balance sheet. As of the end of January 2026, they are sitting on approximately $2.8 billion in cash.
$2.8 billion.
That's an enormous liquidity buffer. But here's the piece of news that got buried in the earnings panic, and it's arguably the most important detail regarding their survival. They just secured a $3.6 billion delayed draw term loan.
$3.5 billion in credit.
Specifically allocated for buying GPUs.
That changes the risk profile significantly. Usually with these high-growth infrastructure plays, as an investor, you live in fear of dilution, right? You worry they're going to issue $1 billion in new stock tomorrow to pay for the chips.
Precisely. This loan effectively kills the immediate dilution risk. It's a delayed draw, which means they don't pay interest on it until they actually use the money to buy the chips. They don't need to beg the equity markets for cash.
So their growth strategy is fully funded.
Fully funded.
So they have the money. But money's a commodity. Anyone with a checkbook can buy H100s or Blackwell chips. What's the moat? Why does Microsoft choose IREN over Amazon or Google or some other startup?
It comes down to speed and power. IREN is vertically integrated. They don't lease their data centers. They own the dirt, the buildings, the transformers in Australia and Canada.
Okay.
And more importantly, they have fixed-rate power contracts.
Which is huge. In the AI game, power is the bottleneck. We're running out of electricity in major hubs.
Exactly. Energy volatility can kill your margins. IREN has inoculated themselves against that. So when Microsoft needs capacity now, IREN says, we have the building, we have the power, and we have the chips coming.
So that $1.9 billion contract isn't just revenue, it's validation of that whole infrastructure.
It's total validation. And their guidance, they're targeting $3.4 billion in annualized recurring revenue by the end of this year, assuming they deploy 140,000 GPUs.
140,000 GPUs. That's a massive fleet. That puts them in the big leagues.
It does. And if they hit that target, the current valuation looks, well, it looks absurdly low.
Well, speaking of the current valuation and looking absurd, let's pivot to the charts to see how the market reacted to all this news. Because absurd is one word for it. Disastrous might be another if you were holding calls last week.
It was a rough week for the chart, no doubt about it.
So let's break down the crash on February 5th. The stock drops 11% immediately following earnings. And the reason seems pretty clear-cut. They missed revenue consensus. The street wanted $229.6 million. IREN gave them $184.7 million.
Yep.
That's a big miss. In this market, if you miss by 20%, you get taken out back.
It was a miss, yes. But we have to ask why they missed. The miss wasn't because Microsoft stopped paying or the AI business stumbled. The miss was driven entirely by the legacy business, the Bitcoin mining. Lower Bitcoin prices, increased mining difficulty. That is what dragged the revenue down. But the market treated it as if the entire AI thesis had failed.
So you're saying the market punished them for the business they were trying to leave while ignoring the business they were actually trying to build.
Exactly. It's classic capitulation. The sell-off deepened in after-hours trading, even after the news of the $3.6 billion financing came out.
Right.
That tells me the algorithms and the panic sellers were just reacting to the red number on the screen. They didn't read the press release. They saw a revenue miss and just hit the sell button.
It does smell like panic.
Yeah.
So if we assume this is an overreaction, where does that leave the valuation? Is this a bargain? Or is it a value trap? Something that looks cheap but just keeps going down.
I'd argue it's a massive opportunity created by oversold conditions. Look at the multiples. Right now, IREN trades at about 26.2 times trailing PE.
Which, for a high-growth tech stock, it's pretty reasonable.
It's incredibly reasonable. The peer average for the sector is 52.2 times. So they are trading at literally half the multiple of their peers. But here is the real kicker. Look at the forward revenue multiple. It's sitting at 3.2 times.
And what do pure-play AI infrastructure stocks usually trade at?
Double digits. Easily 10 times, 12 times, sometimes higher. IREN is being priced like a dirty cyclical miner while building a clean, recurring revenue AI cloud platform. The valuation gap is glaring.
So wide you could drive a truck through it.
You really could.
And looking at the volume analysis on that drop, it looked heavy.
It was heavy, but the structure of it looked like panic selling by momentum traders. The hot money that got in for a quick buck, saw the red headline and bailed. But the technical setup now suggests a mean reversion is imminent. When you have a disconnect this wide between price and value, the rubber band usually snaps back.
It's a bold call. But let's look at what the rest of the world is saying. Let's move to market perception and the news flow. Because scanning the headlines from February 4th to the 7th, polarized is an understatement. It was like watching two different movies.
It really was. It's a tale of two narratives.
On one hand, you had the bears taking a victory lap. I saw headlines like IREN earnings, caught in the eye of the AI storm. There were analyst downgrades to sell, citing execution risks, basically saying, see, they can't handle the transition.
Right. And those takes are focused entirely on the rearview mirror. They're looking at the Q2 earnings miss and just assuming that trend continues. They're betting that IREN is just a miner playing dress up.
But then, almost immediately after, you started seeing these contrarian takes pop up. Headlines like, this IREN sell-off makes no sense, I'm buying aggressively. It wasn't just mild optimism, it was aggressive defense of the stock.
That's the smart money starting to speak up. You have this split, retail and short-term algos are reacting to the Bitcoin headwinds. But the long-term investors are looking at that $3.6 billion financing and the Microsoft contract.
Do we have any proof that the smart money is actually buying? I know we don't have the 13F filings, the institutional holdings reports for this specific week yet.
We don't have the filings, no, but the behavior is telling. Usually when a stock crashes on a fundamental break, analysts go quiet. They hide. Here, the fact that sophisticated analysts rushed to publish bullish theses after the drop suggests real conviction.
They weren't scared out.
They didn't get scared out. They doubled down. They see the dip as a gift.
It is interesting when the analysis gets louder as the price drops. Usually people go quiet. So conviction seems high among the believers. But, and there's always a but with me, I am not letting us off the hook this easily. Let's take a hard look at the risks. Because if this was a guaranteed home run, it wouldn't be trading at 3 times revenue.
Absolutely. We have to be realistic. This is not a risk-free trade. It is a venture-style bet in a public company.
So let's talk about the elephant in the server room, execution risk. The entire bull case, everything you've said about that $3.4 billion revenue target, it rests on deploying 140,000 GPUs by the end of 2026.
Correct.
That is a massive logistical challenge. We are talking about supply chains, shipping, installation, cooling, power. If NVIDIA delays a shipment, or if a data center isn't ready, or a transformer blows in Canada, that guidance is toast.
It is the single biggest risk. You're right. It's a logistical tightrope. If they face bottlenecks or power constraints, they will miss that target. And if they miss that target, the market will punish them severely.
Catastrophic for trust.
Oh, yeah. However, they do have a track record of building infrastructure quickly in Australia and Canada.
Yeah.
They aren't new to this. But yes, the timeline is very aggressive.
And then there's the history. We have to remind listeners of the substantial shareholder dilution over the past year. They've issued a lot of stock to get here. Even with this new loan, if they stumble, if costs run over, are they going to turn to the equity markets again?
It is a valid concern. Dilution is the enemy of shareholder returns. The loan is designed specifically to prevent that. It's debt, not equity. But debt has to be serviced. If the execution fails, they might be forced to dilute again. Investors need to watch the share count closely.
And finally, the macro factors. We can't ignore the AI jitters. The whole sector took a hit recently. If the broader AI CapEx cycle slows down, if Microsoft or Google tightens the belt, those contracts could be at risk.
That's the sector risk. If the AI bubble, if you want to call it that, bursts or even deflates, IREN will feel it. And they're still tethered to Bitcoin. If Bitcoin stays depressed, that legacy business drags down the headline numbers, just like we saw this quarter.
It just confuses the whole story.
It confuses the narrative and scares off the pure play AI investors.
So it's a double-edged sword. They need AI to stay hot, and they need Bitcoin to at least not crash.
Exactly. They are walking a bridge between two very volatile worlds.
All right. We've seen the good, the bad, and the ugly. We've looked at the cash, the crash, and the risks. Let's move to the final score and investment horizon. It's time for the verdict. Putting it all together, what's your bullish score for IREN?
I am assigning IREN a bullish score of 7.5 out of 10.
7.5. That's pretty high given the recent bloodbath. Walk me through the final thesis.
It is a high-conviction turnaround. You have a company that is fundamentally misunderstood. The market sees a Bitcoin miner. The data shows a fully funded AI cloud platform with massive backing from Microsoft. My time frame here is a 12 to 18-month hold. This is not a trade for next week.
Then what's the logic on the price target? If we hold for that year and a half, what are we looking for?
If they execute the GPU deployment, that is the big if, and the market re-rates them from a Bitcoin miner multiple to an AI cloud platform multiple, the math is staggering. We can see 100 to 200% upside. We're talking about a target range of $80 to $120 per share.
80 to 120. From current levels, that's a multi-bagger.
It is. The risk is there, but the reward is asymmetric. Downside is capped by the cash and contracts. Upside is a complete repricing of the business.
So what should we be watching? What's the next signpost that tells us if this thesis is working or failing?
Watch for the Q1 2026 earnings. That should be coming up in late April or early May. We need to see proof of AI acceleration. We need to see that AI revenue number jump again, significantly above that 17 million mark. And we need updates on the GPU rollout. If that earnings call shows progress, the narrative will shift very, very quickly.
Late April, early May. Mark your calendars. It sounds like IREN is sitting on a launch pad, fueling up, but the weather is still a little stormy.
That is a perfect way to put it. It's a brave play, but the fundamentals are screaming buy to anyone willing to look past the headline noise.
Well, there you have it. High risk, high reward, and a massive pivot in real time. That's the verdict on IREN. Don't forget to subscribe, like, and comment to support the show. We want to know, are you buying the dip or is the Bitcoin drag too much for you? Let us know below. See you next time.
Thanks for listening.